Hi there, welcome to kneppyinvest. Time for my weekly technical update. In this video series, I look at charts. That's all I really do. And really, the whole reason I look at charts is because the movement of share prices is really brought upon by sentiment, whether there's positive sentiment, negative sentiment, and sentiment is driven by psychology, the psychology of the investor. And that is very important, in my opinion, to try to understand in regards to investing, even if you are investing for the long term. Because would you rather buy a company at $1 or 50 cents? Yes, you'd probably rather buy the company at 50 cents. And you can use charts to decide when the best time to buy a company is, even if you want to hold it for the next 20 years. In today's video, the featured company will be Adriatic Metals. I hadn't really done any research on this company until today. And the reason I started doing a little bit of research on this company is because of not a recommendation, it was a request by a viewer of this channel for me to have a look at Adriatic Metals. I had a quick look and I am intrigued. So I will do a standalone video on this company. And not only am I intrigued by what this company is doing, when we look at the chart, the chart looks absolutely fascinating right now, with a potential of the share price of this company going to an all-time high. We're also looking at 6 other companies on the ASX that their charts are looking really interesting at this point in time. And those 6 other companies are a bit of a blast from the past with Mesoblast. I held Mesoblast for a short period of time back in late 2020. And that share price around then was around $4 or $5. A lot of negative sentiment drove the share price of Mesoblast lower than $1. But it looks like the share price is breaking out. Looks very interesting at this point in time for a potential short to medium term trade. MMA Offshore chart of that company looks absolutely brilliant right now. Retail Food Group share price has taken off after their AGM. And if anyone's been holding Retail Food Group shares for the last 6 or 7 years, I apologize, because your value of your holdings in that company have taken an absolute hammering in that time period. CSR, Super Retail Group, and City Chic, which I actually did include in last week's video, but City Chic is even looking more intriguing right now. We'll talk about why it's looking more intriguing right now when we look at that chart for that company. The featured company in today's video is Adriatic Metals. They not quite a silver miner just yet, but they hope to get a silver mine into production soon. So because they will be a silver mining company, that means their share price will be highly correlated to silver prices. I just had a look at the silver chart. And I'm not going to include the silver chart in this video, but silver prices have moved into an uptrend, and that is important for Adriatic Metals. One way to trade commodity companies or mining companies is to look at the underlying commodity, and when the underlying commodity is in an uptrend or just moving into an uptrend, that is when you can take advantage of shift in sentiment in that underlying commodity and buy into those companies that are mining that commodity or about to mine that commodity. And Adriatic Metals fits into that category right now. And that's one of the reasons why the share price has really taken off in the last few months, increasing from about $2.15 to a current share price of $3.30. Now, the reason why Adriatic Metals chart looks intriguing to me is just based off where the share price is right now compared to the high, the all-time high we saw in October last year at about $3.32. Because the share price of Adriatic Metals is just shy of that all-time high, that means if we do see a breakout, if we see Adriatic Metals share price break above $3.32 on pretty good strength, that would be a breakout. That means the share price of this company would be an all-time high. The only nervous thing I would probably would be wary about right now is just the share price has really gone on a run over the past few months, increasing, as I mentioned, from $2.15 to $3.30. So the share price has has increased by about 50% in a very short period of time. So I wouldn't be surprised to see some profit taking moving forward. But if silver prices keep going up, there's no reason why Adriatic Metals keeps on rising from here. Now on to the blast from the past, which is Mesoblast. And if we go back 2 years ago, share price of this company was around $4 or $5. Some bad news released from the company saw sentiment in this company really shift to negative, and that negative sentiment drove the share price down from $4 or $5 all the way down to less than $1. And you can see the share price in this particular chart, which goes back to October last year, just keep on moving from October all the way through to July, when the share price reached low of 62.5 cents. Now, in all these charts, I probably should mention this, in all these charts, I'm just using two moving averages, which is the 100-day and the 50-day moving average, and the area in between those two moving averages is colored in a particular color. When the 100-day moving average is above the 50-day moving average, which is sort of portraying a downtrend, the color in between those two moving averages is shaded in red. But when the company's share price is in an uptrend, or when the shorter term moving average, the 50-day moving average, moves above the longer term moving average, that color is shaded in green. And we have seen that happen with Mesoblast over the past few weeks. We have seen a crossover in those two moving averages, and it looks like the share price of Mesoblast is moving into a I won't say well-defined uptrend, but the potential for a well-defined uptrend is developing for Mesoblast. We are seeing higher highs and higher lows, so that is one thing you want to see for a developing uptrend. And the other thing we are seeing, again, apart from that crossover in the moving averages, is a breakout above a pretty strong resistance level. And that strong resistance level was around $1. And that resistance level at $1 was tested about 4 or 5 times in the past 4 or 5 months after it broke through that resistance level, which was support in May of this year. And then 2 trading days ago, in fact, 3 trading days ago, we saw the share price of Mesoblast move through that resistance level on strength, a really long one-day candlestick on pretty strong volume. So that is a very bullish move in regards to Mesoblast. Not only that, the last 2 trading days, the share price, after it went through that breakout, the share price went sideways. So there's been no selling. And not only that, the share price went above the previous high in October of this year. So about 2 months ago, the share price has moved above that high. And now the share price of Mesoblast is at an 8-month high. So a lot of things going right for Mesoblast right now. This looks like a potential pretty good, safe, short to medium term trade. From a chart that looks really intriguing in terms of a company share price breaking out and moving into an uptrend, that is Mesoblast, to another chart that is looking really intriguing for different reasons. Now, this is not the current chart for Chic. This is a chart I provided in last week's video. So this is the chart that goes to November 27. And the reason I included Chic in last week's video is around the share price moving down after the AGM. In fact, the share price dropped 25% to about $1. And I decided to show you this long-term chart, about a 2-year chart, because during COVID-19, the price or share price of Chic dropped to 75 cents at its low. And I was really intrigued with Chic because on the last trading day, November the 25th, the share price of Chic after the AGM was at $1. And I thought 75 cents, which was a low during COVID-19 financial panic, that could be reached. Now, it only took 1 day for 75 cents to be reached for Chic. So let's have a look at the updated Chic chart, and there is reasons why this is intriguing to me. And the main reason Chic is intriguing to me is just where the share price is right now compared to those lows during the COVID-19 financial panic, which was 75 cents. So we had the share price drop about 25% on November 25, and then the next trading day, which would have been the November 28, the share price dropped another about 20 to 25% and closed right on 75 cents, which was the COVID-19 financial panic low. And then the next 4 trading days, the share price has really hovered around that 75 cents level. The other thing to note here is really large volume over the last 6 trading days, particularly the 4 trading days after the AGM, including the AGM. Really lots of selling coming in. So there were those investors those fund managers who looked at the AGM and are worried about this company. And that's why they have driven their share price down to COVID-19 financial panic levels. So there could be some value with this company. Unfortunately, there is a lot of negative sentiment in this company right now. And that negative sentiment really started towards the end of 2021 when the share price was above $6 or just, we'll say above $5.50. You can see the move of this company's share price from an uptrend to a downtrend in, would say, about the first day of trading in financial year 22, when the share price was around $5. And that was a sign to get out of this company, because then in February, when the company released their half-year results, we saw a big down day, and that was bad news moving forward. So that was sort of the market. As the share price moved from an uptrend, from positive sentiment to negative sentiment, the market was sort of anticipating some bad results for Chic, and those bad results came to fruition, and that's why the share price has dropped from that $6 level all the way down to 75 cents. So the question I have for myself, is there any value in Chic at 75 cents right now? For full disclosure purposes, I am a shareholder of the next company I am featuring, MMA Offshore. The main reason I took a position in this company was all about the trend in the share price. I wouldn't consider this company to be a high quality, so I would say it's low quality. So for low quality companies, it's all about the trend in the share price. And then I saw the share price break out in February this year on pretty good volume, and that's when I took a position in this company. And my whole trading strategy in regards to this company was just to ride the trend, and the trend has been up ever since February of this year. So no reason to sell out, no reason to take profits, just ride the trend. And on the last few trading days, we have seen a fair bit of action with pretty good volume coming in for this company. And not only that, the share price on the last trading day of the week, December the 2nd, rose from 75 cents to 80 cents. So about a 6% rise in the share price on pretty good volume. And the share price closed at 80 cents. And 80 cents is almost a 3-year high for this company. Last time we saw the share price this high was just before the COVID-19 financial panic. And that was not the time to be taking a position in this company, because the share price was dropping like a rock. So sentiment has shifted, definitely shifted for this company. The share price of MMA Offshore is in a well-defined uptrend. Not only that, I'm starting to hear a little bit of chatter in regards to fund managers talking about this company. And for the share price to continue to rise from here, I think fund managers will have to do some heavy lifting moving forward. So I'm quite bullish about MMA Offshore right now, but it's all about the trend. If I see the trend coming to a completion, that's when I'll take my profits for this company. On to Retail Food Group. And to be fair with you, I can't believe I am looking at Retail Food Group because of what happened back in 2017 to 2019, all the awful things that went through with this company. I actually didn't think this company would survive, but it has survived. Here we are talking about Retail Food Group. The main reason I decided to have a look at Retail Food Group included in this video is just what has happened in the last few trade days after the company had the AGM. That AGM did elicit some excitement in the market around Retail Food Group. But before we talk about that, let's go back to 2015. The share price of this company reached a high of $7.50. So $7.50 was the high around that mark. And then all those bad things happened and the share price dropped from $7.50 all the way down to 2 cents. Yes, that was a low for Retail Food Group, and that low was reached in March 2020 around the COVID-19 financial panic. And since the financial panic, the share price of this company has gone sideways. We have seen some rallies in the share price up to about 10 cents, and we have seen the share price get back to about 3.8 cents in June of this year. But then the share price went sideways between about August and December, or actually probably the end of November of this year. And then the company had the AGM, and the share price, because of the AGM and the excitement that AGM created in the market, the share price increased from 5.6 cents to 7.4 cents. A nice little increase in the share price on high volume. Now, the one thing I am wary about in regards to what's happened with Retail Food Group's share price in the last few days is how similar it looks to what happened in July last year. So the same sort of potential breakout happened with Retail Food Group in July last year. You can see the share price increasing from about 7.4 cents to a high of 10 cents in a few trading days. So no doubt, and there was a higher volume as well. So no doubt there was some good news released by the company, but this breakout was short-lived, or the excitement was short-lived, because the share price started to go down and moved into a downtrend in November last year, and that downtrend and negative sentiment returned, and the share price went from, say, the 7 to 8 cent range all the way down to those lows of 3.8 cents. So again, the one wary thing I am is just how similar the last few trading days look compared to what we saw in July last year. Doesn't mean a similar thing will happen, but history doesn't repeat, but it often does rhyme. There were a few retail companies I was thinking about including in today's video, but I decided upon including Super Retail Group, names fairly similar to Retail Food Group. So hopefully I don't mix up the names of those two companies. That's something I am apt to do on occasion. There are a couple of reasons why I decided to include this company in the video. The first is because the share price has moved into an uptrend. We have seen a higher high and a higher low. We have seen a crossover in the two moving averages. Share price is moving up. The second reason, probably the more important reason, is the share price has moved above a resistance level at around about $11. And the share price has remained above that resistance level, which is possibly now support for 4 straight days. So this chart is looking more interesting because of those two reasons: a new uptrend, and the share price has broken through a resistance level. The last company I want to look at in today's video is CSR, not the sugar selling company. That's a completely different company. This is a building materials company, if I know my companies. And to be honest with you, I have done no research on CSR, just assuming they are in building materials. If I am completely wrong, make sure you tell me in the comment section. But anyway, the reason I wanted to include CSR in today's video is because I have never looked at this company's chart before. Well, that's a lie. I have looked at this chart before, but nothing has really excited me in regards to CSR's chart until the last few days. And the reason CSR chart looks interesting right now is for two reasons. It does look like the share price is moving into an uptrend. So a possible developing uptrend for CSR. And the second reason is because the share price has broken out of a trading range. That trading range is portrayed by these two horizontal dashed lines, really beginning in August of this year. So shares of CSR have just been in this trading range for about 4 months, so not very long. And you can see every time the share price got to about $4.80, share price pulled back. And every single time the share price got to $4.30, we saw a little bit of buying. In fact, the share price was oscillating between the top of the range and the bottom of the range quite frequently in the last 4 months. And then just over 1 week ago, the share price broke above the top of the trading range at $4.80 and has kept on going up. So that means the share price right now at $5 is at a 6-month high. So quite a few things going right for CSR right now. That's all I have for this technical update, 4th of December 2022, featuring Adriatic Metals and 6 other companies on the ASX. Now I am going to set up a video for Adriatic Metals, do a little bit of research on this company. So look out for that video in the next week. If you have any questions, any thoughts, any concerns, anything at all you'd like me to know or anyone else to know, just leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.